What's up guys, it's Andy and today I'm going to be talking about a company called TPG Paystack. It's a SPAC and I think it has the potential for strong growth in the coming few months. For those of you guys who don't know, so a SPAC, it's a special purpose acquisition company. It's essentially a blank check company and its sole purpose is to raise finance so it can merge with an existing company and take that company public, which is a little different to the traditional IPO process, and it's also known as a reverse merger. So this company, TPG Paystack, is still valued relatively close to $10, and $10 is, you can say that's the floor price, so that's the lowest the price can fall, and it's currently sitting at 11.93. So the potential downside from where it is right now is about 20%, and the potential upside is significant. There's so many SPACs in the market that are sitting at $14, $15, $30, whatever it may be. So there is a significant potential upside. It's a good idea to invest in SPACs, especially if the target company is a solid company with great growth prospects. And I think that is the case with this company over here. So TPG is looking to acquire a company called Nerdy. Just before I go into what Nerdy is, what the platform is, and why I think it's a great company, I want to talk a little bit about the company which I mentioned last week, Hims and Hers Health. So I talked about this company in my last video, and I'm seeing some strong gains. It's gone up by around 45% since I acquired it. Around $16, now it's sitting at the $24 mark. This is a company that I intend to hold for the long term. It's just been a great week for my portfolio and I'm really happy with the stock that I picked out. Guys, don't forget to hit the like and the subscribe button, and always remember to do your own due diligence. Nerdy is essentially the parent company of Varsity Tutors, and that's an online tutoring platform, and this will be acquired by TPG Paystack Opportunities, the special purpose acquisition company. Current market cap of the company is around 1.24 billion. The deal is expected to close in early Q2. So an introduction to TPG Paystack. TPG has a long history of supporting and investing in high growth companies, including internet platforms and marketplaces. It has already taken 56 companies public since 2011. It raised its first SPAC in 2015 and it has completed 5 SPAC IPOs to date. So TPG has a long history of investing in educational technology platforms. So some of the other companies in which TPG invested in include Dreambox, Renaissance. It has a history about the sector, and I really believe that the expertise which the company has can help TPG take Nerdy public. So it says over here, Nerdy is a great match for TPG's investment criteria. It knows what it's doing in the space, so there is potential upside growth in that regard. You can see there's a massive potential market size for the direct-to-consumer education market. 1.3 trillion, which is absolutely huge. COVID again has been a driver in the growth of this industry, and more people are turning to online education because of the virus. Having a quick look at the numbers, it's got annualized revenue of 120 million, 87% online revenue growth, a 68% gross margin, not too bad, and 169% increase in paid online session growth. Having a look at some of these graphs, like really impressive. In 2018, the revenue was 48 million, and it's got a forecasted revenue of 267 million in 2023, which is a 45% annual growth rate. You can see over here that the market is growing really fast. So the US e-commerce digital share market has increased significantly from 2004 to 2019. 2.1% to 11%. Great stats over here, with 70% more likely to use online learning compared to a year ago. 83% also plan to use online learning services in the future, which shows that this isn't just a one-off event, and I think this is likely to continue. The market size is pretty huge, as you can see over here. 14 billion academic tutoring market, 27 billion test prep, 14 billion professional certifications. So that gives a total of like 62 billion. Total market cap currently is 1.2 billion. It will rise to 1.7 billion once the reverse merger is complete. So definitely like a significant opportunity for huge growth. You can see users have used 4.7 million plus worth of hours of Varsity Tutors. It offers 3,000 subjects for students to choose from. There's various different options for teaching, such as one-to-one tutoring, adaptive self-study. You can have small classes, you can have large group classes. A lot of them are free as well. Apparently you can go to a seminar with 50,000 other people being taught by, say, like an astronaut or a celebrity. You can see over here that the students are from all ranges of ages, from like kindergarten to high school to even professional. So it's not really specializing in any one particular age group, but rather anyone who wants to learn can use this platform to learn. Another thing I really liked about this platform is the fact that it uses AI. Looking at the competitive landscape of Nerdy, you can see that Nerdy appears to have a significant upper hand compared to some of its competitors, including Chegg, Qmore. Nerdy's ticking the boxes in all of these 4 criteria, including personalized live instruction, online focus, access to higher quality instructor regardless of location, and multiple live learning formats. Whereas its other competitors don't tick all the boxes. And look at Nerdy's management team. Like you can see, there's a whole bunch of experience in it, including people from Amazon. Now digging into the company's financial performance. So I think a key positive about this company is its massive growth rates, rising from 17% in 2020 all the way up to 87% at the end of 2020. You can also see improving gross margins from 2018 all the way up to 2023. From 63% to 72%, which is good. I found this graph interesting as it compares Nerdy's valuation to some of the other massive online platforms out there, including Chegg, Fiverr, Etsy. And Nerdy has a EV to revenue valuation of 7.1x, whereas companies such as Etsy 12x, Teladoc 16.4x. So judging by this diagram, there is definitely a lot of scope for growth. So guys, I just wanted to highlight a couple of risks associated with this company. Like, no video is going to be complete without the risk. So the company posted a 23 million loss in 2020, and it's only expected to turn in a profit in 2023. Weiss Law is investigating whether Pace Board acted in the best interest of public shareholders. Weiss Law is investigating possible breaches of fiduciary duty. Guys, if you like this content, don't forget to hit the like button and please subscribe to my channel. I really appreciate it and it'll help my channel grow. See you next time.